Good morning. My name is Lori Infantino, President of the Insurance Community University. Welcome to Part 2 of Business Income, It's Made Easy. Today we're going to talk about the purpose of business income as it's defined in the form. So the purpose of business income is to pay for the financial loss following the direct loss, as we discussed in Part 1. So, for example, if a restaurant, again, has a fire, they're going to lose money. And so business income is going to restore that money. Specifically, the form states, we will pay for the net income defined as the net profit or loss before income taxes. This is what the business would have earned had no loss occurred. In addition, we will pay for the continuing normal operating expenses. And that's really important for us to hone in on here. The form's only going to pay for the continuing expenses, and clearly it's going to be the insurance company who will determine what continues and does not continue. We're going to be talking about that when we get into how we choose coinsurance, and it will be that fine line between the continuing operating expenses and then all the operating expenses. Remember that all business income forms are actual loss sustained. Now, what does that mean? You know, if you think about this as just English, and we don't really make it all that difficult, the form says we will pay the loss you actually sustained. So it's the responsibility of the insured to prove, number one, they lost money because of the fire, not that they were going bankrupt before the fire, and they need to prove what that loss is. And that can be a very difficult proof process. Let's use the example of a restaurant again. Let's say that the restaurant last year, when you had the financial information, was making $100,000 in profits. And they intended to make another 10% this year. So for this year of the policy, we're estimating that they would make $110,000 if they remained in business. So if they were to have a loss and they could actually prove they would make that $110,000 and they're out of business for a year, then this form will pay. In addition, this form is going to pay for those continuing normal operating expenses. And what might that be? Well, that might be rent. It might be payroll that necessarily continues during this period that they are down. And so all those operating expenses will be continued. The insured must prove their loss, and this is going to be very important, and we're going to say this a lot over this series of class. And they must sign a sworn proof of loss 60 days after the company requests this. And so this is not a form, believe it or not, that actually pays loss of income on a daily basis or monthly basis. It actually pays 30 days after the proof of loss can be signed. And so certain companies, of course, are more willing to give interim payments, and that would be totally dependent on whether or not your insured could prove their loss. So if they can put together financial information for the first 30 days and the company's willing to upfront some money, that's entirely up to the company at that point. Now, we're going to pay for as long as they're out of business, and then the form's going to stop at that period of restoration, which brings up a very interesting question. What if the insured does not go back into business? What if they decide that they can never get back into the marketplace? Will this insurance form pay for their loss of income for what the period would have been for them to get back into business if they choose not to? And the answer is yes. They met the test. They suffered a direct damage. They're able to prove that they're losing income. They would have lost income. Now, clearly, the operating expenses would not be there because they aren't, reopening at that point. So we still will pay. So far that's easy, right? So go ahead and join me for Part 3. And in Part 3, we're going to talk about the purpose of rental income.
That was easy.
See you next time.